I'll start it out because we may have people joining in late. And I know Angie popped in and then she popped right back out. So here we go. Well, hello. This is Kathy coming to you on our monthly membership sessions. Each month, typically it's the third week in the month, we're having a session that goes deeper into some attributes of legacy, some keys, if you will, of legacy. And before I get started, I want to give a little bit of time because I see some people are joining. So I just want to give a little bit of time for people to get into the room and maybe just see how everybody's day is going. It's Sunday. And Angie, I see you ran a marathon, so I'm really excited to hear about that. I saw the pictures. You want to share a little bit about that? You're muted right now though. So let me check.
Sure,
Go ahead.
sure. It was a half marathon
Oh, a half
and
marathon. That's good.
13.1 miles. I
Wow.
I've run several of them before. But this was kind of a unique one in that I last June I suffered an injury and
Oh,
I'm still kind of recovering from it. And so it was fun just to get out there and kind of see what I could do. I had to go a little slower than what I normally would, but
mm-hmm.
and walked hills, which kind of saves your legs a little bit. But
Oh,
it was great and just so fun to see so many other people around me pushing themselves. And so, and I took the opportunity while I was there to pitch my ACT
oh, good,
class.
good, good
I did a
job.
live, yeah,
I
after
saw.
I did a live video trying to get the finish in the background saying, I want to help your team finish their race. So,
Oh, okay. Okay. Good, good. That's cool. That's cool. I saw the Facebook post, so I just wanted to give a shout out to you for doing that. I always said I was going to do a half marathon, but I thought a half marathon was like 5K. Now you're saying 13, what, 13 and a half miles? That's a lot. That's a lot. So,
you build up, you could do it. You could do it, Kathy.
okay, okay. If you say so, you say so. Okay, well, I want to welcome everyone. So we have Angie, Nerdishta, and welcome Naomi. Thanks for popping in. Appreciate that. So tonight we're going to take a little deeper dive into some finances. And we're going to look through the lens of legacy. And I have two components that I want to share with you. Because those of you who went on the challenge with me, I did a challenge on Legacy Builder in Facebook. And if you haven't seen that, I'll be happy to share that with you. But during that challenge, I shared three keys. I started with ownership, saying, God owns it all. And then stewardship, we're required or we have the responsibility to manage. And so that's the piece I want to go into a little deeper tonight. And I have like a two-prong approach. And so I'd say get a little notepad because I'm going to work on this with you. I gave some homework in the challenge and I didn't do all of the homework. I did part of the homework, but I didn't follow it all the way through. And so it's been on my heart to go through this. We all, now my microphone keeps switching. Sorry about that. Let's see. Well, I'll just keep talking. I know my sound might kind of go up and down, so excuse me for that. Finance, a tool, money's a tool we all need. However, I find that in my business, I have the ebbs and flows of income. And I find when I have the peak of it, that my standard of living tends to go up. I might spend more at the grocery store. I might spend more on gifts. I might spend more. And then when I hit the valley of the income, then I'm still living as though I have all of that, but I don't. And so that's why I think it's important to understand. And instead of jumping to, I was going to jump to the insurance piece, but I think I want to start with the net worth piece. I'm going to do this opposite of how I had planned to do it because since I'm already starting to talk about money, I think that's an important path to stay on. So we're going to start with assets. If you're familiar with a net worth sheet, you have that first column, which is all of your assets. And when you look at assets from a financial standpoint, when you're working on a net worth sheet, businesses will say only list assets that are tangible. But I want to challenge you that you have assets that are intangible. You have assets of legacy. You have assets that have to do with your family history. You might have family photos. You might have family heirlooms. There's all sorts of assets that you have that you can't really write down in terms of monetary, if you're tracking with me. So what I for this first piece, I want us all to think about what we have, what we are stewards over. You might have a mortgage, you might have a home. I won't say mortgage because that's a liability. You might have a home or homes, plural. Let me get my pen out too while I'm talking. You might have homes, you might have businesses, and businesses from the standpoint, you might have corporations, you might have LLCs, you might be a sole proprietor, you might just run a business that you generate some income. Maybe you do some things on the side, you do hair, I mean, anything. Maybe you do a little Ubering on the side, whatever it is you do, the income that you generate from that, I want you to list it all down, the assets. So I'm just going to start on my ledger here, assets. I want you to list your homes. If you have homes, plural. I didn't mention this, but bank accounts. So bank accounts, maybe you have more than one. Maybe you have personal bank account and you have business bank accounts. You want to list those. You want to list all of your businesses that you own, that you're stewarding over. List all of those businesses. Some of you have already done the homework. I know Sandra had done it because she posted live inside the group. So you want to put down all of your assets, tangible and intangible. I actually have a family crest. My father's family created a crest, a family crest. They went back and they looked at the ancestry and they came up with symbols that signified the family. They were agricultural type, they had farmlands. So I should have brought it out, but it's a family crest. I'll probably just send a picture of it with this video, this recording of the video. But it's a crest and my maiden name is Cross. And so it has a physical cross. And within the crest, it has like farming tools and it has symbolism of the family. And so when we would have family reunions, we would pull out the crest and educate the family, give that educational history. So that's a family heirloom. I would call it an heirloom, but it's a family momentum that we pass on to generations like that, different, that you have, that the family, and my volume keeps changing. Oh, I keep seeing the signal, but hopefully you can still hear me. So write down all of those things, heirlooms. Can someone think of something that's not tangible that you might have? You can even put it in a chat if you will. Let's see. Nope, I don't see them. So continue to write your assets that you have. Um, homes, banks, businesses, crest. And while you're doing that, I just want to share with you what I've told myself in terms of this particular piece about stewardship, because we're working on our assets. So I want to share this, how we can step out stewardship in everyday practices. I think when we think of stewardship, we think of everything that's within our domain, everything that we can touch, everything that we can feel, everything that we can imagine is in our domain. And the Lord laid it upon my heart to share with you that when we think of what we have, we need to think about protecting it. So I'm going from our assets to protecting it, because we can have all these things, but if we don't protect it, then we are not being good stewards. And so protection, I want to share that piece with you. So I'm basically putting my feet in both areas. I'm putting my feet in the net worth asset because I want you to, the net worth umbrella, I want you to still write down and think of all of those things that you're in charge of, things that you maintain. And I want you to keep an open mind about protecting, because it's kind of like what is it, the little three pigs, and they build these houses, and some of the pigs think they're good because they have a house of straw, and some think they're good because they have a house of stick, and the other one thinks he's great because he's got a house of brick. And so I'm saying this because I want you to be not a little pig, but I want you to protect what it is you're creating, all of these things that you are responsible for stewardship. And so I've been in Pedro's space and he talks about protection first, but I want to go a little deeper with that. Protection first says basically you insure what you have, right? For those of you who may not know, he talks about insurance, protection first. How do you protect what you have? You get insurance. If you're driving a car in most states, you have to have insurance because you don't not only protecting yourself, but you're protecting others against injury, against harm, right? And when you think about a human life, protecting the human life, how do you protect a human life? You get life insurance. Now, there's various schools of thought on what type of insurance and what's the best insurance for you. And I'm not here to debate or to try and tell you what would be or share with you what I have, which I don't mind sharing with you. But when I thought about insurance for human life value, for human life, there's a formula that's called human life value. You didn't even know that this thing existed, but in the insurance industry, the insurance companies can't just insure people for whatever they want. Contrary to popular belief, they can't just insure for what you want. So still writing your assets down, still writing your assets down. Okay, so they can't insure for what a person wants. They insure for human life value, HLV. So you can look this up. There's various calculations for it, but I'm going to give you a simple one, a simple one. But before I give you that, I want to share with you how important it is. The importance of getting insurance is not to make someone rich, and it's not even to make someone whole. It's to replace the income that that person provided, even though they're not here, even though they're not here. My father did not believe in insurance. He didn't believe it was necessary. We had conversations about it, but he's he was from an old school and he thought, as long as I have money in the bank account, as long as the mortgages are paid off, I don't need money. Well, it it ended up working out in his favor because he did leave some things of value for my mother. He had a pension that transferred to her. He had Social Security that transferred to her. But if you think about the standard of living, the money that you get from Social Security and a pension is probably not going to sustain you at the level that it would have sustained you had the other partner been there. And so human life value is a formula that you use to determine how much you need to live until that person would have retired had they still been living. And so the formula is you take the income. I'm going to use an example, and you might want to write this down: human life value, HLV. So human life value is the income. I'll just give a general income. I'm going to say I earn 200,000 a year, right? So that's the income. And then I'm going to multiply that by the number of years until my retirement. Now I'm 60, and each year I keep saying I'm retiring at, 60. I'm retiring. Before I was retiring at 55, then it was 60, 65. Now it's 70. Okay. And so but I probably won't even retire at 70 because I really love what I do. And so we'll take that income of 200,000. Now you write down your income, your annual income, because you are replacing your life for who you leave behind. Because if they depend on you, if you have someone that depends on you, you can't replace the person. You can't fill that void in any way outside of the finances that it would take to sustain life. At least you can mourn with some additional income. So you take that number, like say 200,000, and you multiply that through the number of years until you plan to retire. So I'll say I'm planning to retire at 70. So I'll take 200,000 and I'll multiply it by 10. That number ends up being $2 million. So an insurance provider would say, I need $2 million worth of insurance coverage to sustain those 10 years that I would no longer be here should I pass away. That's also the same number as net. It could be. I won't say it's the same. It could be the same number as your net worth. So we've talked about human life value insurance and what the purpose of it is for, not to replace a life, but to provide financial support for the people that are left behind. Because you don't know when you're going to pass. You may plan that, but we don't know. We know we have life here and then we don't. So that's the purpose for insurance, to replace financially the loss that could occur when you're no longer here because people depend on you. And if you, for example, if you may be a stay-at-home spouse, you have value because you cook meals. I mean, there's things that you do that the person or people left behind would have to hire someone. You cook, you wash, I mean, all those things can't be written down in a dollar form, but person left behind can hire someone. And so that's where that number comes in terms of income. So if you don't generate an income, still put some income for your human life value to calculate that. Now you've been writing these assets. Now I want you to look at the next piece of net worth. We have a formula for net worth. And when you get life insurance, you can either get insured based on your human life value or your net worth. Those are the two pieces that an insurance company provider would look at. And so now we're going to go to the next piece in your net worth formula. So we have our assets. Now let's think of liabilities. Liabilities. The first thing that pops out to me is mortgage. I'm a homeowner, I have mortgage. I have mortgages because I have investment properties. I have loans. I have loans that are secured and I have loans that are unsecured. So the secured loans would be like my home. The unsecured loans would be, for example, I'm in a couple of programs that well, they're not loans. I take that back. Those are liabilities, but they're not loans. I'm thinking of another loan. Maybe I borrowed money from a friend or something and I'm paying them back. I've done that before. So loans, any loans you have, personal loans, or maybe a business loan, maybe a loan that you um, are paying back for a program that you purchased. Sometimes there's loans in that part, or maybe there's other debts, right? So these are your liabilities. There's other debts that you may incur. So what I want you to do is consider those liabilities as well. Welcome, Dr. Claudia. I want you to consider those liabilities as well. So we've talked about the net worth formula starts with all of those assets that you've written down and your liabilities. And when you think of liabilities, also think of all that credit card debt. Maybe there's credit card debt that you have. So you want to write down the credit card debt. Any liabilities that you have, write them down. And the importance of knowing your net worth is The importance besides insurance is because if you have goals to increase your net worth or increase your income, but you don't know where you are right now, then it's hard to assess it's hard to assess when you get there because you may be here and you want to get there, which is a higher level, or you may already be here and you think you're here. I mean, there's an imbalance because of lack of knowledge. The Bible says we perish because of lack of knowledge. And so, this, knowing the state of your flocks, knowing your own situation, is going to empower you for more. Because I believe we're in a season of not only an abundance opportunity, we're also in the midst of a lot of chaos in society. And we're also at the peak of the baby boomer wealth transfer. And so the reason I want to bring this to you is because we need to position ourselves for that wealth transfer. I told the story about the billionaire who adopted adopted his gardener because he didn't want to pass it on to his kids. And so you want to be in a position to where you can receive this wealth transfer that could be coming to you. But if you don't know what to do with it, you don't know what to do with it, and you don't know where you are, then it'll be like winning $1 million in a lottery or winning lottery money, and then it just goes. And so we need to have a place to put it. So continue with your liabilities. So in one column, you have all of your assets, you have your homes, your bank accounts, your businesses, your all of those assets, the family crest, the heirlooms, all those tangible and intangibles. And you have your liabilities, your mortgages, your loans, your credit card debts, any liabilities, any obligations that you have. Bible talks about, and I know what's his name, uh, the guy who talks about, I can't call his name right now. He talks about borrow is slave to the lender, and the Bible says that too. I can't think, Ramsey, that's his name, Dave Ramsey. He talks about this, the borrower is slave to the lender, and I used to hate when I would hear him say that. But when I really dug deep into that and how I feel about liabilities, they are heavy. They are like a burden. They are like a burden. And so I want you to know what your liabilities are because we're going to talk about some methods and strategies to decrease your liabilities. And in some cases, I'm going to share with you a secret that I recently found out on how to make some liabilities just disappear, right? So, I mean, this is key. This is key to know where you are so you can know how to get to the next destination because we're always moving up for glory to glory. So we have our assets, we have our liabilities. Now the formula for net worth is assets minus liabilities equals net worth. So when I started with the example, I said 200,000 for assets. I said, well, I didn't tell you that. Okay, that's my own notes to myself. Okay, so here's my example that I ran through for myself before I totaled up everything because I'm looking at increasing my net worth. But if I don't know my assets and I don't know my liabilities, I won't even know, number one, what my net worth is, and two, how to get to a higher net worth. So the example I took for myself is 200,000 for assets. And I wrote the first one I did was did a couple of examples. I did 200,000, no, no, not 200,000, 2 million, excuse me, 2 million for assets, all assets. So that's real estate, bank accounts, everything. 2 million for assets. And I subtracted 800,000 for liabilities, liabilities, mortgages, other debts, obligations, 800,000. And that came out to, anybody know? It came out to 1.2 million for my net worth. And I looked at that, I thought it was worth more than that. So then that was just a figurative number. I wasn't really drilling it down. And so I think it's important to drill it down and to know what your true net worth is. So then I said, well, my assets are really more than what I gave it, gave credit for, because your assets are the value. For example, I live in a house. The value of the house is, I think we just had it appraised. It was around 950,000, right? So I'm just going to round it up. So the house alone here is 1 million. And then we have other properties, rental properties. And I thought, I'm not even counting some of them we don't have mortgages on. So I'm forgetting those assets have value. So then I thought, okay, my assets are really more than I thought, because I really wasn't really paying attention to it. You know, I'm getting these things. I'm like, God, you're blessing me. And I'm not really being a good steward because I don't even thank you for what I have. And so I changed that number. I only went up by 1 million, but I took it and I took 3 million. That's still a conservative number. I think I probably could go higher, but I took 3 million. And I thought about the liabilities because I just entered into an agreement to have some of my liabilities reduced. I had thought about getting an equity line, and I thought about these other avenues to reduce debt. But the more I thought about it, I was like, Holy Spirit, getting more debt, cover more debt, just doesn't seem right. I'm stacking my liabilities up to try and cover liabilities. Does anybody hear what I'm saying? You don't hear what I'm saying. Okay. So liabilities, these debts that I have, we have, let's say credit card debt. In some cases, you can get a home equity loan if you own real estate. You can get a home equity loan or a second mortgage or a home equity line of credit or a bank line of credit. Follow? You can get those vehicles to cover debt, but they're still debt. So you have these credit card debts, you have all these debts, and then you're getting another debt to stack on top of that. This is crazy. This is crazy. I'm like, I don't like doing this. I don't like doing this. I'm like, God, there's got to be a better way. There's got to be a better way. And so, does that make sense now? Is that a little more clear? Okay. So, I'm going to go back to my formula 3 million assets minus, I'll reduce my liabilities to 400,000, right? Do I have mortgages and things like that? So I'm going to reduce my liabilities, because either you can increase your assets or you can reduce your liabilities to increase your net worth. So when you look at your own situation, you need to ask yourself, how can I increase my assets and how can I reduce my liabilities to increase my net worth? And so just by having a different frame of mind of calculating or reassessing the state of what I have, my assets, I just picked another number. And this was shortly before we got on the Zoom. I said, okay, Lord, I think mine is higher than that, but I'm going to use this number for now because as I continue to assess, I'm going higher and higher with this number. So I'm at 3 million for assets. I'm subtracting 400,000 for liabilities. Now you're using your own numbers, but I'm giving you just an example, okay? So minus 400,000. Can anybody tell me what that net worth is? 300,000, 3 million. Say 300,000, sorry. 3 million minus 400,000. What is that net worth? You can unmic or you can put in the chat. What is that? What is that net worth? 3 million minus 400,000. 2.6, right, Nadisha? 2.6 million net worth. So I have a goal, personal goal of increasing my net worth to 10 million. So now that I know that I can either increase my assets or reduce my liabilities, I can either one, acquire more assets like real estate, things like that. Since I'm in the real estate space, I can do that. I can acquire more assets. However, I also need to reduce my liabilities. If I'm just getting more real estate and I have all this debt, then it's really just taking me up teeter-totter. I'm not really increasing my assets truly and reducing my liabilities. And so look at your own particular situation. And maybe it's not real estate. Maybe real estate isn't your vehicle. Maybe you've learned some other wealth building tools that you can use, such as options, such as stocks. I mean, there's various ways, commodities, whatever your jam is, assets, increasing those assets, right? And then reducing those liabilities. So I want to share with you something that I found out because I was in search of finding a way to reduce my liabilities. Um, let's see, I'll stop right there before I go because I can tend to get on a roll here. So before I share that, are there any questions on one, human life value, how you calculate that and what's the whole thing? And do I even really need to get insurance? And then the other piece on net worth. Any questions on either of those two branches before I go into this little secret I found out? This little secret. All right. All right. No questions. Come on, y'all. No questions. No. Y'all just ready for the secret? Okay.
It's
So
clear
I
to follow your path with millions. What is there that I do have? It is no million yet.
okay. Okay. Well,
Thank you. Here is a
you
what type insurance do you have?
oh,
Can we
I
include insurance value to our network on the chat?
ooh, wow. Great questions. First one, insurance that I currently have is term life insurance. And I have had whole life, I've had universal life, I've had stated, I've had all the things, but I canceled all those policies because I didn't know what they were in the past. I still retain one policy, which is a term policy, $1 million policy. But I realize as I'm going through this that I'm underinsured. I used to think $1 million was a lot of money, but really, truth be told, if I were to pass away tomorrow, and I'm not tooting my horn, but without that life insurance policy, even that one, my family would be in jeopardy of losing assets because I'm paying the bills. And I'm doing my best to train, teach, mentor the family. But when you have someone that's really not interested in numbers and doesn't really want to look at numbers, there's a challenge there. So I'm praying for a breakthrough in that. So I need more insurance. So I've decided to purchase a whole life policy again because I've had it before and it's got cash value and it builds and all these great things. But that's what I'm planning to purchase next. I may decide to just have whole life. I may decide to add term. I may decide to add an index with that. So there's a couple of different ones in terms of me. Now, can we include insurance value in our net worth? That's a really good question because I didn't, but there's really, okay, net worth. I'm 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 like processing that one because that's a really, really good question. Um, so if I were to add that in, well, it is part of your net worth if you think about it, because it's what you are worth. It's the value of your human life. If you calculate that human life value and you also get insurance for that same amount, then when you pass away, the person is left with that insured value. But where I kind of have a disconnect is that's all they're left with. Maybe, maybe not. I don't know about what you have in your asset column, if that's something that's also passed on to your loved one, because some of us may have what's called a trust. I happen to have a trust. So a trust is where you can put all of your assets into the trust. You can put your real estate into it, you can put your bank accounts into it, you can put it all into it. Now, some of you may not have your loved one receiving all of these things from your assets. You may will property to a kid. You may will a property to a grandkid. You may say, I want this to stay in the family legacy. That's where I kind of have the disconnect, because it depends on how you delineated those assets. So if you're looking at a bigger number, yes, the insured value would increase your assets. I'll put mine in there. Whoever said that. Who said that? What? Uh, who said that? Karen, Dr. Claudia. That's a really good question. Um, I'm gonna write that one down. I might have to revisit that. Uh, can you include insured insurance in net worth assets? Okay, that's a really, 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 really good question. I like that. Okay, so now you ready for the secret? No, let's see. You have any other questions? What I talked about my type of insurance and um okay. So I talked about having debt. We all maybe have debt. Some of you might be really good and don't have debt. I do. I'm not that one. If anyone does not have debt, maybe you could teach the next. You can tell us your secrets. Okay, so I have been in search of my husband and I. We were about to refinance our home because we have a lot of equity, right? For those of you who may not be familiar with equity, is what your home's worth as opposed to what you owe in your home. So we owe like in the 400s, but our home is worth like almost $1 million. So we're looking at all this equity thinking, okay, we can get a line of credit, we can just, you know, we can pay off debt, we can do all these things, but we have an interest rate of 2.25. That's like unheard of. And so the more we went through this process and they were offering these different interest rates, I'm like, it doesn't feel right. Something's not right, because we would trade this great interest rate for this higher interest rate to get higher debt. It's like it just didn't make sense. I couldn't quite figure it out. I was like, Holy Spirit. And then we started running into obstacles with getting refinance, which I think it was really great because it was preventing us from doing something stupid. So one of the obstacles was I'm self-employed. I have assets that I write off, which makes it look as though my income is very low. So when you look at that, they're like, well, you don't qualify. I'm like, what do you mean I don't qualify? And then they're telling us, well, what you can do is you can modify your tax returns and don't write this part off. And I was like, that's not right either, because that's a lie. And then they said, well, all these properties that you own that you received from your family that are only in your name, you could transfer them to your husband's name just for this moment and then transfer them back. I'm like, that's not right either. They're just, it's just not right. I'm like, this is not right. So every time we attempted this, it was an obstacle. Then we would get these little mailers that would say, you can consolidate your debt with this other vehicle And with this vehicle, we can pay off all, and you may be receiving these in the mail. So I'm probably talking to some of you out there, you get these things. Yeah, praise the Lord for the Holy Spirit. You may get these things in the mail and it says, you should have brought one up here. We get them every day. You can get a home equity line of credit on a rental property. You can consolidate debt with this loan. You're pre-approved. You're pre-qualified. So I actually stepped in and called one of them and was almost there. I actually, it was, I think I was falling prey to, it wasn't greed. I was falling prey to the debt, the weight of the debt. And I was like, okay, I want to get this weight off of me. So I was looking for a release. But then I realized what I was doing was wrong. So I canceled it. Like within 24 hours, I just canceled it. It's like, Lord, there's got to be another way. And so my husband ended up getting a call from someone else saying, hey, we have this program that you might be interested in. And I was like, we've heard it all. I don't want to go through this all. We've already paid for an appraisal. We've already been disqualified. We've already decided we're not going to be unethical. We're not going to lie. We're not going to do these things to get what we want because it's wrong. So my husband finally got on board with me because at first he was like, why don't you want to do that? I said, because it's wrong. And he said, but you can just, I was like, no. And then when it came to the real estate, I said, my father deeded that property to me for it to remain in the family. He didn't deed that property to me to do nilly-willy things for my own pleasure, for my own convenience. So it's a principle of being a good steward. It's the principle. So finally, my husband sends me this text back that says, we're not going to he sent me a group text of the guy who was really trying to get the loan thing. He says, we're not going to do anything unethical. We're not going to change our property taxes. We're not going to transfer anything. We'll find another way. And so then he gets this message, and I'm thinking it's the same thing over and over. I'm like, okay, here we go again. So this is different. I actually talked to the gentleman yesterday. This is just how recent this is. So I talked to him yesterday and I said, what makes you different? What do you have? What's the thing that you have? And he says, well, our program is based on credit, not qualifying credit, but we're based on the credit that you've acquired. And we have attorneys that will take and dispute certain things on your credit report. I mean, maybe your name is not. So basically, these attorneys are using technicalities in some cases to erase and to eradicate credit. I said, is that possible? He said, well, there's a Fair Credit Act and all these acts that basically say if you receive credit and they did not ask certain questions, such as, what's one of the questions he says? If they didn't ask what your assets were and your liabilities and your monthly household expenses, then they haven't met their obligation to lend you the money in the first place. We're not saying that you didn't borrow the money. We're not saying that you don't owe the money. We're saying that they didn't hold up their standard of the Fair Credit Act. I was like, what you say? So I know. I was like, really? So we talked for almost 2 hours because I was like, how does this work? And he says, you're not getting out of debt. You're not getting out of the debt by acquiring more debt. You're getting the debt eradicated because it's a legal process. It's a legal process that the creditors have to go through, and it's a legal process that you go through. You've received the debt and you've been paying the debt. But if there is, I'm using this word loophole. He didn't use that word loophole. I don't think he did. But it's in essence like a loophole. that the debt would be eradicated. Now, it's a process and it takes time, and you do pay. You figured out my monthly, I'll just share with you. Figured out my monthly credit card debt was like 2,100 or something like that. And so my new payment would be $415 every 2 weeks or $830 a month. So I would basically be saving $1,200 a month. So that's why when I took the 800, I said, well, I'll just cut it in half because I'm reducing or eradicating the debt. So what they do is they continue to pay as they're talking, they being the attorneys, because this is an attorney-based program. The attorneys speak to the lenders. They're communicating. They're saying, cease and desist all communications. We will pay you what, we will pay you the debt that's owed. However, we are researching some of the practices that occurred during the time that this person received this obligation, this debt. I was like, this is, this is, this has got to be a godsend. I'm like, how does that even happen? Yes. How does that even happen? Yes, Miss Claudia. Yes. How does that even happen? I was like, God, this is exactly what I needed. This is exactly what I needed because I have been in the roller coaster of income, like, ooh, really high and then, ooh, really low. And I'm like, ooh, I need a sale. I need a sale. And I'm thinking, okay, am I not budgeting? What am I doing wrong here? Yes, I do need the budget. I definitely need the budget. What's the fee for the debt program? There's no fee. You're basically, there's no fee. What they're doing is they're taking the money that you're paying them. Like my fee, if you want to call it a fee, then we'll call it a fee, is I'm paying $830 a month for 33 months. That's the agreement that I signed. And so that if you roll that forward, what's 830 times 33 months? I don't know what that is. I'm not really fast. Naomi, you're really fast at calculating. Let me see. Let me see. Somebody knows. I'm not really fast. So the way it was explained to me is they take that money and they're repurposing it to make payments, and they're also paying themselves. 264? What's the fee? Hmm, Um, it's not 264, is it? Or are you saying 2000? Let me see. Calculator, CAL calculator. So I'll take my 33 months times 33 months times $830. Is that right? Oh, that is right. So that's 27,390. But the part I didn't tell you is debt, my cumulative debt is over 70,000. So that piece from my 70 down to the 30 is eradicated. So that I have an obligation of 70,000 and some change, and I'm paying back 27,000. So I am releasing myself of a lot of financial debt by going through this. And I forgot the name of it. I'll share that with you. But I was like, okay, God, this is it. And you know how you get peace when something's right? And you get a little like uneasy when it's not right. This was peace. And when I talked to him, he was a Christian. Not that all Christians are on the up and up, because I've talked to some that will tell me everybody's doing it. Why not just do it this way? And I'm like, because it's not right. It's not right. But and he actually did the program as well, and he shared with me what's on the other side of it in the process and how a lot of people that are consumed with debt. He was telling me the people that he works with, like multimillionaires that are in so much debt to where, some of them have wanted to commit suicide because of debt. I mean, that is consuming. It is consuming. It's heavy. It's a burden. God does not want us to live in burden. He's given us so much to steward over in abundance, and He has so much more for us. And so being free of all of that financial debt will help get you in the right direction. So that is why I wanted to share this tonight. Because when you know something good, you don't just keep it to yourself, right? It's something that I think would benefit you too. And you may not be in that situation where you're feeling consumed by that, but I was. I was. I was. And I was looking for ways to free myself. But the more I thought of freeing myself, I said, it doesn't make sense to stack on more debt to get out of debt. It's like if I owe 70 and I'm borrowing 100, thinking, oh, because I've done it before, I've got an equity line before, and it doesn't work the way you plan. It didn't work the way I planned. I got the equity line thinking, okay, I'm free. I can use it for certain things. But if you don't plan how to spend, if you don't budget, if you don't tell your money where to go, it's going to go everywhere. Like the Bible says, it's going to take wings and fly away. So, yeah, it will take wings and fly away. And we'll talk more about maybe in the next month about wealth building tools, wealth creation, because I think that would be next, creating some wealth tools. But yeah, this monster of that. Um, so let me make sure I covered because I kind of went off on that. I went off on that because it went off in a good way. Because it was just- so let me just do a recap for those who may have come in a little late. Is we talked about human life value. Human life value formula is your income, your current income, where you sit now, your annual income times the number of years until your retirement. So if you're retiring in 10 years, it's that number times 10, that number times 20, that number times whatever. That equals your human life value. And that's what an insurance company will look at insuring you. They will not overinsure you. They will make a recommendation based on the information you give them of your human life value. Okay. They may ask for proof. They may ask for your W-2s or your tax returns. I believe they asked me for tax returns in my husband's W-2s. So they'll base it on that. That is your human life value. And as I said, it's not to replace you as a person, but to replace the income that you would have produced would you have continued to live for the benefit of those you leave behind. Because you want your loved ones to be, they're going to mourn anyhow, but to mourn and have that consuming debt, it's, I have a good friend of mine, her husband passed away. It's been, I think, 2 years now. He was 59 years old, perfect health. He had just had a physical, just had a physical. They were just talking about life insurance, but he hadn't finished the process because he was getting like the health, the physical, there's a process you go through for insurance. And I don't know if it was a weekend or a weekday, but he complained about pain in his leg and he hollered for his wife. And when she came down, he was having difficulty breathing. And shortly thereafter, he passed away at 59 years old in perfect health. I say perfect because he had just came from the doctor getting a checkup for insurance that he did not get a chance to complete. So it's important for the people you leave behind. It's immensely important for the loved ones. And I realized in this process that I'm underinsured. I'm underinsured. So I will be taking steps to ensure that I protect my family against harm. Um, so that's the human life value piece. And then we talked about net worth. Your net worth is all of your assets. And I want to challenge you to not just write the monetary assets, but write those intangible assets, those because you want someone in your family to know. I want my grandchildren to know we have a family crest. I want them to know these things. I want them to know the stories about their ancestors. I even have videos, I have mementos. I mean, those things are precious to me, they're priceless. But write down those assets because you want to take the assets and subtract minus your liabilities, whatever your debts are personal, professional, private, secured, unsecured, any obligation, anything that you owe. And then assets minus those liabilities equals your net worth. And an insurance company will insure you based on your human life value or your net worth, one or the other. They typically will look at your net worth. It's a lot easier to substantiate because they can look at your credit report. They do pull a credit report so they can see those liabilities. They might not see them all if you have some personal debt that you don't have run through creditors, but that's what the insurance company will use on determining your net worth and your insurability. Okay. And we include, okay, I was just looking to see if there were any other questions. Okay. Now, I've blurted everything out. I feel good now because I've shared. I feel good. It's important. It's important if you have something of value to share it with others that can benefit from it. And that's the whole point of doing these monthly sessions. So I think next month it would be important to go into some wealth building tools because I'm acquiring some. But I want to see, question, is it always recommended to do a trust no matter how small your assets are? Um, Is it always recommended? I would say not necessarily, not necessarily. I happen to do a trust because I have a large, I, mm, I did a trust because I actually did two trusts. I did one for my father's side of the family because of the properties and the assets he left me. And then I did one for my current family and all of the assets that we have. And so my goal with my father's side of the family is because my sister passed and her children did not get the inheritance that they were due. I'm ensuring that everyone in that matriarch in that family legacy gets benefit of the wealth that was created by my father. So that's that. And then within my family, I did a trust because I want to shore up and protect everything that's in the family. But it's your trust is like a higher standard of of not insurability, but protection. It's a higher standard of protection. So it's not necessary, but it's a good thing. And it might be good to just have a conversation with someone who prepares trust. And that's also part of the program. Those who took my offer, that's going to be part of the program. So you'll get a chance to actually speak to an attorney about that. And that would be a good question for him. I'll have Chris Brown doing that. It'd be a good question for him to answer. So keep that in mind. Okay. So I've kept you officially for an hour, which I promised. And now, if any other questions that you have, let's see, Nadia, can you change the view to, is it on gallery view right now? Because I can't tell. Is it? No. All
Yeah,
right.
it's gallery now.
Okay. Okay. So thank you, Angie, Nadishja, Naomi, Sandra, Dr. Claudia for being here tonight. and sharing with me on stewardship. And I want to see if there's any other questions. I know you asked them along the way, but if there's anything else, you can either ask them here or you can ask me privately. That would be fine. But the next one, I haven't put the date on it, but typically it's going to be the third Sunday evening. That tends to land on a good place on my calendar. But so I'll make sure that you get this in advance because there are a couple of people I sent it to kind of late and they just weren't able to make it. So um, I'll make sure everyone gets it earlier, at least maybe a week earlier. And then I'll do some reminders because I know how it is. We get busy and, forget. So any other questions that I can help with?
Good information to think about. We have to go and rewatch the reply. It's lots of.
I know. My brain was, I was like, oh my God, wow, so much to share. And then I actually did a voice, and I might share that with you guys. I did a little voice thing to myself to kind of like remind myself, which I shared a little bit of it. But I'll share that with you too. If I can, I don't know if I can send a large voice memo. I'll see if I can or not. Okay, but those of you who are here, I'll make sure that you get a copy. This is only on Zoom, so I'm not loading this in the Facebook group or anything like this. This will be a separate section for those of you who are in this membership program. So thank you so much. I'll make sure you get copies of this. And until next time, if there's something you want to know about wealth building keys for next month's session, message me and let me know some things you're curious about because I'm on that journey. Some of you, I'm on that journey with you. So, okay. All right. Well, have a good evening. Enjoy the rest
Thank
of your
you.
Sunday. You're welcome.
Thank you. Thank you, everyone, for coming in. Bye. Bye, everyone.
Okay, I gotta stop the recording. Let me see. Where's the recording? Stop. There we go.